Water is the source of life, and we need it to stay hydrated and we need it to live. In fact, humans are made up of 60% water. Last year, I decided to add a focus on the water industry as part of my portfolio because I believe in the long term, water-based companies will be vital to our survival as humans. In this episode, I take a look at the water industry and I talk about companies on my radar for potential investment, and I discuss one stock that I invested in last year that's currently up 130% in my portfolio. Hello, you wonderful people out there. My name is Chris, and welcome to the Business Report Show, where I give my insights on the world of business and investing. A couple things before we begin. Make sure to click the subscribe button, and if you do end up enjoying the video, make sure to hit the like button. Every little bit helps. Second, everything I discuss on this video, they're just my opinions. There are no guarantees of success. Always seek professional advice before investing. Now on to the video. Since the dawn of the Industrial Revolution, our use of water has evolved into more resource-intensive consumption patterns, supporting tremendous industrial and population growth. Freshwater withdrawals from agriculture industry and municipal uses have increased nearly sixfold since the 1900s. While rates of global freshwater use increased sharply from the 1950s and onwards, since 2000 it appears that it is plateauing, or at least slowing. With recent data shows that both China and India have been the largest users of fresh water. On a per capita basis, North America and the Middle East actually lead the globe in usage. Another important statistic to look at is the rate at which fresh water is being renewed. Renewable fresh water is derived from internal river flows and groundwater from rainfall, and is a key data point for analysts because any renewable number below the per capita usage data would indicate a shift in scarcity of water. Of course, this varies from region to region and is highly dependent on weather, but in general, the data shows that our per capita renewable fresh water is decreasing, which isn't a good sign. So while the data is not positive for a resource that is so vital to human survival, there is some positive research and development coming from many companies who are dedicating their operations to fixing our water problem. A few areas to look at if you are looking into water-based companies are companies that provide products or services to filter water, store water for distribution, treat wastewater, and also the desalination of water. Desalination is the process in which you transform salt water, typically from the ocean, into fresh water for industrial, agricultural, and human use. Desalination is a very energy-intensive process, and capital investments into any desalination plant is very high. What I prefer to look at are companies involved in developing technologies that make the desalination process more efficient and cost-effective. The current global water market is estimated at $842 billion, and it's expected to grow between 5 to 14% annually, depending on market and geography. So this market is huge, and there's a lot of room for potential growth. Here are some companies that are on my radar right now. I've not done an in-depth analysis into each company yet, which is why they're just on my radar and I haven't added them to my portfolio yet. I won't purchase these stocks until I've had a more thorough review of their financials, their management team, and the current market ratios to see if it's a good time to buy in. So the first company I want to talk about is Consolidated Water Co. Consolidated Water Co. is a water solutions company supplying potable water, treating water for reuse, and manufacturing and providing water-related products and services to customers in the Cayman Islands, the Bahamas, the United States, and the British Virgin Islands. With a market cap of $197 million, they're not a big company compared to some of the blue chips that operate in this space. However, they have been in the business since 1973. They first started out as the Cayman Water Company, providing water and wastewater treatment solutions to the Cayman Islands, and has since grown beyond those borders. Their share price is currently trading around $13, which is below their $18 52-week high, and upon initial skim of their financials, while their balance sheet seems healthy, their net income has been dropping slightly for the past few quarters, which is probably why their stock has dropped since July of last year. That being said, since November, it has slowly made some gains from its lowest close in that month of $10. What's also interesting is that they pay a dividend of approximately 2.6% yield based on Tuesday's share price. There could be some capital appreciation and income to be generated from the stock, but we would need to find out a little bit more why net income has been dropping, and if it's just a blip in their operations, or is this showing a greater long-term trend. Shares outstanding is very low at 15 million, but only 50% of those shares are held by institutional investors. Look for this one to be a potential growth play. The second company is Watts Water Technologies Inc., ticker symbol WTS. Watts Water Technologies has been around for a long time. Started in 1874 by Joseph Watts, who fabricated a tiny relief valve in his machine shop in New England. Watts Water has grown into a multinational company that focuses on water solutions for residential, industrial, municipal, and commercial settings. At a $4.3 billion market cap, it's actually a fairly sized company that currently pays a small dividend yield of 0.72% from the current share price of $128. The current share price is slightly below its 52-week high of $131, but their financials look very healthy with stable revenues over the last 5 quarters and a stable net operating income. Shares outstanding is very low at 33.64 million, and it is mostly held by institutional investors, which means the growth opportunity on this stock may be a little bit limited, so look for more of a value play here. Now, the last company I want to talk about is a small cap stock that I invested back in September of 2020, and I'm currently up 130% based on Tuesday, January 19th's trading price. H2O Innvation, ticker symbol HEO on the Toronto Stock Exchange, has made some impressive gains in the last few months due to positive news of contracts that they're signing with new customers. Most recently, it appears that they've signed a contract with Tesla, or as they indicated in their press release, the largest electric vehicle manufacturer in the US. H2O's market cap is tiny, 254 million in Canadian dollars, but they do have 680 employees. They provide operation and maintenance services to over 275 utilities, and they do export their specialty products to over 70 countries. They offer customized water and wastewater treatment solutions using membrane technology. They design and fabricate integrated water treatment systems for municipal, industrial, and commercial users, and specialize in applications for drinking water, water reuse, wastewater treatment, and industrial process water. What attracted me initially to the stock, of course, was that it fell within my thesis of investing in water-based stocks. Second, their balance sheet actually looked quite healthy, with stable revenues over the last few quarters, and at that time, with a debt level of about 23% to their assets. Now, despite the global pandemic, they also showed a continued growth in revenue year over year, reaching 24% growth in the last quarterly report. The gross profit margins are healthy as well at approximately 27% and have also grown year over year. Another line item that got my attention was the breakdown of revenues by region. While the revenue was down a bit in Canada and the US, they grew revenues in other jurisdictions, mainly in Europe. I like this because Europe is spending a lot of money on clean water technology and distribution systems, which will be a huge market for H2O Innvation. I like the stream of positive contract news that H2O keeps pumping out. Back in June, they announced a strategic agreement with Nanostone, a ceramic membrane manufacturer. Also in June, they announced closing contracts on 3 new projects totaling $5.8 million in sales. In July, they announced a small acquisition of $2.75 million of a water infrastructure maintenance company in Texas, which will give them capability to service clients such as municipalities, municipal utility districts, and public water systems in Texas. But I think the bigger play is taking that knowledge there and growing it to other customers in other regions. Also in July was the renewal of 2 operational maintenance contracts worth $4.3 million. In August, 6 new project contracts secured, total of $17.8 million, and it just keeps going and going if you check their website out, up until January 18th, where they announced what I said before, the $3.2 million contract with the largest electric vehicle manufacturer in the US, Tesla. I'm quite positive on H2O, or ticker symbol HEO, and if they shore up the revenues further, this small cap play may actually eventually be shifted over to the growth side of my portfolio, but we will wait and see. There are definitely a lot of competitors in the space, but no one has really popped yet like Tesla for the EV market. There's also still risk in owning stocks like H2O, as any negative press will affect its stock price more than the large cap stocks. In December, they released their first 3-year strategic plan to investors, which is why I like the company even more, as now we have a clear direction of where management wants to take the company and what we could really expect from them over the next few quarters. Now, I know for those who are watching in the US, you may not have access to the Toronto Stock Exchange to trade H2O, but there are definitely a good handful of small cap companies in the US, like I mentioned before, that are trading on NYSE and NASDAQ. There are also some ETFs that specifically invest in the water industry that you should do some research into. Well, that's it for today's video. Don't forget to hit the subscribe button, and if you enjoyed the video, make sure to give it a like. Every little bit helps. As mentioned, everything said here is just my opinion. Always consult a professional before investing. Also, leave a comment down below. I want to hear from you and get your take on the global water market and what other niche markets you may be following for 2021 that I should make a video about. Thanks again for taking time to watch the Business Report Show. Remember, always be learning, always be investing. We'll see you next time.